Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Datia. Clearly, after the kind of selling that we saw in yesterday's session, the downtick has continued, specifically with regards to broader markets as well, because you see the mid cap index, which is seeing cuts of almost around 1.3%. If you see in terms of Nifty 50 as well, we are trading below those 20,000 levels already in session today. The breadth overall is in favor of the bears. But let's welcome in our guest, Sunny Agrawal from SBICAP joins in. Sunny, good morning and welcome to the show.
Good morning and thanks for having me on the show, Hiral.
Always a pleasure to speak to you. Sunny, overall, let's start with a few of the names, or even, in fact, before we get on to individual names, what's the sense that you pick up specifically with regards to the broader markets? The kind of crash that we've seen, I wouldn't call it a crash actually, a sell off that we saw yesterday, which has continued today as well. Is this a one off, or are you seeing now that profit booking will continue?
So definitely there was a slight euphoria in the mid cap and small cap space. So just based on the order books or a few positive commentary, the stocks were running up 15-20%, and this correction was deep. Anyway, it's a healthy correction. So what I feel is that maybe short-term supports like 20 DMA or 50 DMA may be tested again on mid cap, small cap side. But in quality businesses where there is a long-term visibility in terms of earning growth, we may see some buying emerging at a lower level. But having said that, what I feel is that at the current juncture, large caps are looking more comfortable in terms of valuation. So definitely the rotation is likely to happen from mid cap to large cap for next 15-20 days. And if somebody is investing in mid cap, small cap, then one needs to have at least investment horizon of 3 to 6 months to make a decent money at the current juncture. So clearly the focus is on large cap as of now. Mid cap and small cap will enter into the consolidation mode for next a month or two.
Right. So my key question then comes up is, if you're talking about large caps as well, let's pick up the IT pack. TCS, Infosys, HCL Tech. What's your view?
So yeah, definitely IT pack has been an underperformer in the entire rally during last 3 to 4 months. And what I feel is that again IT pack is looking maybe the upcoming the US Fed meeting on 20th of September. That will be one of the key drivers for global cyclical like IT sector. Because anyway, the street is entering that US Fed meeting with an expectation that US Fed may not raise the rate in the upcoming meeting. However, they may consider raising rate in the month of November. But anyway, that's discounted. But in terms of valuation, definitely IT pack is looking decent at the current juncture. And but I don't know. I mean, in terms of stock price appreciation, whether Infosys will head towards 1800 in next 3 to 6 months, that I am not aware about. But definitely, if somebody has got a view of 18 to 24 months, then definitely one can look at companies like Infosys, TCS, HCL Tech, and gradually accumulate those companies.
Right. So that's with regards to IT meters. How are you looking at NIIT? Last 3 days, we've seen a spectacular rally that's coming in terms of NIIT. What's the sense that you pick up, and what would you advise?
So I was checking a corporate announcement of NIIT. I didn't see any major announcement coming from the company side, but what I feel is that the street is buzzing with an expectation that the business is turning around, and with company has went on record to say that they are likely to enter into new business segments. At the same time, they have got a cash of 600-700 crore on their book, which they may be looking for some M&A opportunity. So maybe kind of a turnaround story, play on training and development business. But to be frank, I am not aware what is the development which has led to this ferocious rally during last 3 days. But if somebody is a long-term investor, definitely one can look at on a buy on dips in NIIT. As of now, there is no development which is in the open market with investors.
Yeah. Right. KEC International is another one which did see a strong move in today's session on the back of an order win. With the recent order flows coming in, what's your view on a KEC International?
Yeah, definitely. So we have seen a lot of orders for all the transmission and distribution companies, and that is led by increase in electricity penetration in India, as well as with the railway CapEx program. And at the same time, in KEC, what we are seeing that from last 2-3 quarters, there is a sequential improvement in margins. At the same time, company has went on record to say that they will end this year with 20,000 crore top line and 7% EBITDA margin. So again, a kind of sequential or a kind of improvement in margin story. So one can definitely look at all such companies. Again, the stock has run up significantly. So buy on deep, gradual buying is advised in even cap goods companies or infra companies like KEC International.
Right, so that's with KC International. Moving on, you have Coal India that is in focus as well. Overall, in between, a couple of days ago, we did see some good moves in terms of Coal India. How are you looking at the company?
So definitely, as the opportunity is drying up, the people are flocking to the stocks which are undervalued, where there is a good dividend yield. So Coal India is one of that story which I feel. I think market cap is around 1,70,000 crore. Company generates profit to the tune of around 25,000 crore. So trading at less than 60, pays dividend of annual dividend of around 20 rupees. Again, a dividend yield of 8%. And at the same time, with the increase in power consumption, it is expected that the free coal with the company auction in the open market, their realizations are likely to improve for the Coal India. So I feel, again, it's a value buy. So we may see some minor growth in FY24 in terms of earning, which will be clouded by the increase in employee cost. But again, it's a value buy, and one can look at the Coal India from a long-term perspective.
Right. How about a Tata Power, Sunny? Overall, they've just got $425 million is what they've raised for in their renewable energy arm from DFC. How are you looking at it? Because now the focus is shifting to renewables.
So yeah, definitely Tata Power is a conglomerate which offers you a play across the power sector, whether it is generation, whether it is transmission, whether it is renewable, whether it is electric charger for vehicles, whether it is mining. So they have got their own captive mines also. So it's a combo play on entire power sector, and definitely as the renewable energy portfolio scale up. And anyway, it is also growing at a faster clip. And now with the power shortage in the country, what I feel, even the thermal power producers or generators are getting a boost in terms of likely increase in power tariff. So I feel that Tata Power is well placed to encash on this opportunity, and definitely it should be part of your long-term power portfolio.
Right. Another stock that I want to discuss with you is Phoenix Mills. How are you looking at Phoenix Mills, taking into consideration one, it's real estate plus a pure play, in terms of consumption as well. So, how do you look at Phoenix Mills in trade?
So yeah, definitely Phoenix Mill, one of the largest retail mall operator of India. At the same time, it's a play on urban consumption story. Time and again, we have seen commentary from the many consumer companies that the consumption is holding up very well in the cities, in the urban areas. But that's the problem in the rural area. So I think urban consumption is buzzing, and I don't think so any issues with the Phoenix Mill in terms of growth, in terms of footfall or any operating metric you talk on retail business front. But having said that, the stock has already discounted all the positive factors. So buy on deep, gradual accumulation is a strategy one can look at from a Phoenix Mill perspective. In fact, one can look at other retailers like Trent, which is delivering a robust growth. In fact, they are reporting an industry leading growth. So whether it is in terms of same store sales growth, store expansion. So I feel even Trent is a good alternative in terms of retail play on in addition to the Phoenix Mill.
Right. So Trent, one another one that one should be watching out for. GMR Power and Urban Infra jumped in trade, and this is on the back of the smart metering order that they won in Uttar Pradesh. What's your view on the GMR Power?
Yeah, definitely that entire space of smart meter is buzzing with the order. So we have seen a lot of order flows for other players like Genus also, and hence GMR is also one of the beneficiary of this initiative. And one has to keep in mind that this initiative will it's a decade-long story. So we will see all these company manufacturing smart meter, then they will be deployed at the consumer end, and then there is an angle of AMC which is involved, which will run for next 10 to 15 years. So it's a long-term story, structural story as far as smart metering business is concerned. And one can definitely look at stories like GMR. There is another company, Genus, which is where we have seen a tie-up, GIC Singapore investing in a JV with that company. So entire space, we can see a good earning growth over the next 10 to 15 years.
Right. So that's with regards to the companies which are getting orders in the metering system as well. Lots of stocks that we've discussed so far. Thank you, Sunny, so much for joining us on the show and sharing the views. But clearly, that selling does continue in terms of broader markets. But the key question from here on is going to be, is money expected to move from the broader markets to the large caps as well? And is that going to help us sustain the rally from here on? So lots to watch out for in terms of market conversations that we will continue to get you on BQ Prime. Please stay tuned and thanks for watching.